That should be good to go. Hi everyone. Hope you're doing well. Let me know in the chat about audio and video, but if it's problematic at this point, then trouble in paradise, but I think it's fine. I mean, I don't touch these settings, so more of a force of habit than anything. Evening. Thank you for the audio-visual check. Very reassuring that technology still works from time to time. Just me today. We're certainly going to have a guest next week. But I said to the duck, if we've got no one on, instead of having like a joint stream thing without a topic to talk about, I'll just talk about some stuff that I think is pretty interesting. So you've got me, and then you've got me on Monday as well. You poor souls, don't know how you're going to survive. So let's get started. First of all, obviously thank you for being here, and a special thank you to the extra like crew. You know I see you out there hitting that like button before the video starts. You have all my love and respect. Second of all, thank you to the show's sponsor, Bybit, and the newsletter sponsor, and the tattoo on my neck, also Bybit. We're really getting involved, so thank you to them for helping us out. Their links are in the description below. Go click on them and make it look like we actually have an audience as opposed to just Russian bots. That would be a fantastic card to play in our favor. What else have I got to say? I haven't got a script. Obviously, subscribe to the channel if you haven't already. Certainly, if you are from Telegram, I don't really post updates about live streams in there all too often. I don't want to spam it. So we're almost at, I think, 8k subs or something. So it'd be fantastic for you to join those ranks and go ahead and click all the buttons which help us on YouTube. Basically, you know what that entails. Casual Friday, so not going to go down the whole crazy presentation, whatever route. I'm going to ping off the chat a lot. The title is just one thing we can talk about that I think is pretty interesting and generate some trade ideas into the for the week ahead. We can also then talk about some alt USD pairs that I know a lot of you trade on FTX and Binance, etc. So some of them look interesting, some of them less interesting. So we've got some stuff to do. We've got some stuff to do ahead of the weekend. So in terms of big changes with Bitcoin, nothing much yet. I mean, monthly, there's still, 9-10 days left until the monthly close. One thing that I want to say is it's not uncommon for price to do something like the following, where, and this is on any time frame, right? Just because it's the monthly doesn't mean it can't happen. It just, don't be surprised. But you'll have, let's say, a level of resistance, and then the market closes above it, okay? And then the next candle, whatever, is also above the level. And it's not too uncommon to then see, once you get a close above the level, and especially if you have this sort of thing where it quickly wicks back on lower time frames, but not on higher time frames, a retest of the level in a more kind of candle body way, or in a high time frame way, where you might have like a red monthly that dips back into the level, etc. That's not too uncommon. And that wouldn't be bearish, right? Until the level's actually lost, that wouldn't be a bearish chart pattern. It would just certainly cause some discomfort from where we are now, but in terms of just price patterns generally, it wouldn't be the most shocking thing in the world when we get this sort of thing, that you get a close above the level, you get a wick into the level before some sort of move away, or just, this high could be it, we don't know yet, and then a more full-bodied retest of the level itself, usually with a lower wick through it, before you get some sort of decision made. So that's just something to be aware of. Again, we take it one level at a time, etc., but that's something that wouldn't be too shocking and wouldn't be bearish until the level is lost on a closing basis. Weekly, yeah, not much change. Certainly, scary looking weekly if you're in your candlesticks, but it shouldn't be totally surprising given, 1, 2, 3, 4 green weeks in a row going vertical, breaking resistance. You get the first red candle, and obviously, fun's over. But at the moment, again, that monthly level is 10.7. The weekly level is 11.5. So those are pretty much the big areas I'd be paying a lot of attention to. So 10.7 monthly and 11.5 weekly. Okay, and you'll know that if one breaks, it'll probably lead to a test of the other. That's fairly logical, I hope. But in terms of developments on this time frame, I mean, this is the area, right? Best based off of this highest close here. And currently, we've just spiked above previous week's high. Then you could argue, if the selling persists, you've got a short-term target at previous week's low. We're still in an area of support, right? The daily is a really interesting one, and I think that's the one that I want to discuss with regard to where our bears wrong, because it should come as no surprise that once we've had the first sign of selling or a failed breakout or whatever it may be, any shred of weakness in the market, all the bearish charts come out, and you know, all the scary type of it's all over rhetoric rears its head. I don't, as you know, marry any of these views. I mostly play level to level and play directional biases until they're invalidated. You know, I'll be a bull at support, but if that level breaks, I'll flip. I'm not married to any of this. But just to provide some context, I think it'll be useful to talk about what is the bearish case right now, or certainly I'm going to try to paint it in reasonable terms. Why are people, or, you know, what is bearish about this chart, if anything? And then perhaps more usefully, we can talk about bullish scenarios that will capitalize on that failing to play out, right? Or just some setups generally. So what is the bears argument here? And they do have one, right? I'm not being cynical or facetious, right? That there is a technical argument for at least short-term weakness to be made, and that is based on a daily time frame failed breakout, right? So we had this, the top of this range, just going to use the highest close and the wick, right? You can see its resistance. So you had high resistance, 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 broken, tested as support, and then rallied. I caught a chunk of this move, but not the whole way up. And then you can see with recent price action, you had a close below the level, and it's now currently acting as resistance. So, lo and behold, it's this pattern we somehow end up talking about in every single live stream, where you get a failed breakout above resistance, right? Price pulls back to the level that should have been a support resistance flip here. Instead, the retest fails, okay? And then any pullbacks into the original level of resistance, that's where you'd expect resistance, right? At the level itself, not at the high that attempted to break the level. So that's literally where we are technically one-to-one. And if you're viewing this from kind of a range point of view, this area is the top of the range, okay? The bottom of the range is like on the other side. I'm gonna just eyeball this and say 11K. I think that's pretty reasonable. And then you've got a midpoint-ish type of area, or perhaps the closest level of market structure at this 11.4, 11.5 area. Okay, so the bears argument is that we've now had a failed breakout above a key level. That level is acting as resistance, and at the very least, that will be suggestive of a pullback towards the range midpoint, as well as the range low, and maybe much lower in case, you know, high time frame correction, etc., etc. That's probably the weirdest part of it for me, that a lot of the targets for this kind of failed breakout are really not, I don't use the adjective extreme because I don't think it's just useful when it comes to trading, but there are certainly some extended targets making their way on some charts when this is kind of all you have is a failed breakout for now, okay? Is that technically bearish? Sure. But how you interpret it almost depends on your bias to some extent. Like, if you're really bullish and you see this, you're saying, oh, well, the market just isn't ready to break out. We need to come back to support and make a higher low, right? That's something to be cognizant of. Market structure, in a very strict sense, if you're using, you know, the highs and lows and all that type of stuff, it hasn't been broken yet, right? What would validate, for me, a break in market structure would be a lower low close through this level, this 11, you know, this close here, and it would also mean that weekly support was most likely lost, okay? And then you'd get a slightly rougher looking chart, mind you, still within the bounds of this consolidation, so nothing too crazy, but at least on the daily time frame and within the range we're in, that would, you know, the argument would then have some force, because not only do you have a failed breakout of resistance, but then you would also have a shift in market structure, a break of support to add weight to that. But it's important that that evidence is not currently available on the chart itself, right? For all we know, you know, you've got the low here, and you've got equal highs and higher lows, which is your ascending triangle type of bullshit, right? But basically, I suppose a form of bullish market structure where resistance is holding, but the lows are getting higher and the market's creeping up. That's why an ascending triangle is like usually a bullish pattern of some sort. But for all we know, just looking at recent market structure, if this is, you know, low, high, higher low, higher high, is it that unreasonable to at least be cautious on pullbacks if you're crazy bearish, because you risk shorting into what could be a higher low, which we know aligns into a weekly level? I think that makes sense. It's a reasonable argument. Now, again, the argument loses a lot of force if we get the breakdown, etc., but I just don't think at the moment, from the available evidence, this is, you know, worth jerking off over until it really materializes and breaks some key levels. Okay, that's just my personal view. But again, opinions and positions are totally different things, so we're going to try to add some utility to this discussion instead of just posturing who's right, who's wrong, etc. We can try to generate some trade ideas. The one I'm really looking towards for next week, let me phrase it like this. If you're taking this type of setup, or if if you're bearish for this very reason, you've had the failed breakout, price finding resistance, you expect a pullback here, and then maybe to zero, fine. What we want to ask ourselves as potential buyers is, where do subscribers of this bearish setup, where do they start feeling nervous, right? So a lot of the charts are very similar, on at least the ones I've seen on Twitter, and again, not unreasonable, the technical setup is there, that when you have a failed breakout above resistance, your risk is typically going to be defined by the overthrow or the high made during the failed breakout, right? You could even be slightly more subtle with it and say, well, it could be the thrust candle, the red candle after the breakout, that the high of that defines the risk. And obviously, if price either way doesn't find resistance at the level, the setup's probably invalid. But like your hardcore invalidation is the top, the highest high made, or in the bullish example, it's usually the lowest low made, right? Just to be aware. Now, what we want to ask ourselves as people who potentially may want to action those people being offside or get bullish or get a high probability long setup, I'd like to ask myself, where do those people get nervous? And for me, yes, technical invalidation would be at the high itself, but I think if you look at this breakdown candle, right, this daily candle, which kind of cemented the failed breakout, because you have to bear in mind, this is like a bullish candle, quote unquote, because it's a breakout from the range. This candle still isn't bearish per se, right? It's technically an inside day, because the price action of this candle is contained within the price action the previous day. And on a closing basis, it actually closed above our level. So that's not the bearish candle, right? So what is the bearish candle, or what's the candle that brought this setup to life and gave it validity? For me, it's this candle here, the one that closed below the level and that materialized instead of price finding support. Okay, so this is our kind of context candle, if you will, or the bearish candle that triggered the bearish setup. So I think it's logical, therefore, to say, if price starts to make its way above the high of this candle, those sellers looking for something like this are probably going to start feeling a bit uncomfortable. Do you agree? Do you not agree? Let me know in the chat. We can discuss it. But I just know if this is the candle which validates the setup, and then we start, instead of getting a move down and quick continuation into much nicer lower levels, price starts to reclaim it and trade above its high, I would certainly be getting nervous if I was taking the if I were taking the bearish setup. Okay? Again, yes, technical invalidation, the wide stop is at the highest high made. But it's very rare that, or at least I think it's not entirely reasonable to just ignore everything else until you get hardcore invalidation. You'd expect this area to act as resistance, so if market starts to rally into the breakdown candle high, something is going south, okay? So for a bullish setup, you can kind of start to put the pieces together at this point. I basically want this setup to fail, so pattern failure. So pattern failure would normally expect, something like this, price finds resistance at the level and shits itself. So pattern failure, I just want the opposite of that. Some sort of move lower, or price just getting even stuck at these lows instead of offering fast continuation. That'll probably get a few sellers sweaty, and then any pushes back above the level, at least on a daily time frame, if you want to be quote unquote safe, but intraday entries may be valid there as well. And then instead of basically a support resistance flip at the level itself. And I think if that starts to happen and you get bullish price action above the upper boundary of the structure, I don't think there's going to be a ton of positions holding on to that thing. Well, I'll just get invalidated up here, so it's fine. I think that will kind of be a warning signal. But instead of getting a fast move, into here, as I've said before, the level looks to be reclaimed again. And then this itself just ends up being an uncomfortable dip into support, and then a move higher. And at that point, as discussed with these patterns generally, it's not resistance that's at the high, it's resistance at the level itself. So I'd expect a really fast move through just this area generally and through these highs if this setup is to materialize. Okay, does that make sense so far? Are you with me? What's the bearish setup? That's that's the bullish kind of. Again, I've said on live streams before, some of the best bullish setups are good bearish patterns failing, and some of the best bearish setups are bullish patterns failing, right? So this is just an example of that. This is currently bearish, so that failing would be a good catalyst to hit some longs. And hit the like button as well if you've learned something. That's also very cool. Subscribe to the channel, Patreon, OnlyFans, buy my t-shirts, all of that type of stuff. In order to get bearish this, I'm kind of stumped. I'm not terribly keen on, looking at this on intraday basis. The only kind of positions I'd consider is you can see this area is kind of crowded because we've got the 12K breakout level, and then there isn't a ton of space, especially when we're dealing with high time frame levels, between daily support at 11.8 and weekly support at 11.4. Okay, so the only kind of bearish setup that I would be potentially open-minded towards, and again, I can't tell, I can't know exactly what the candlesticks are going to look like, what the market's going to look like, what happened before this happens, all the context in the world. And as discretionary trader, or as a discretionary trader, the context and all this other stuff matters a lot. But just purely in terms of spitballing and ideas generation, the bullish setup basically looks something like this. Okay, that the bearish retest fails, we try to get long at the structure that was sold. FTA, I mean, this is like a really generous FTA. As I said, it's resistance at the level that matters, and usually this high just ends up being blown through because those shorts covering act as fuel, and a higher high is very likely in those scenarios. So this is kind of the bullish setup, which is the bearish retest failing. Surprise, surprise. Now the bearish setup, again, I can just give you a spitball answer and we can talk about it if market gets to that point. But I like to trade where there's space, and this whole 11K area is kind of cluttered for me personally. So really, you can just eyeball it where the next space is. It's between the weekly level at 11.4 and the kind of monthly, quarterly, whatever macro retest level at 10.7. So again, this is kind of a spitball version, but losing support at 11.4 would suggest that the weekly bias isn't going to play out, and we're going to have to refer to higher time frames. And remember what we said at the beginning, weekly is good above 11.5, and the whatever higher time frame or monthly is good above like 10.7. So if 11.5 fails, I'll look for something between A and B. Now, when the market does that, if the market does that, what time frames, what everything will look like, I've got no idea. We'll discuss it when we get there, but I just have a rough understanding of where there's space and where I think is the bearish trade that would actually be worth taking. Because this for me isn't it at the moment. And even if it were, like even if I were selling this level, the retest of 11.8, as a rule, and this is not something that has a lot of flexibility, my FTA is 11.4 because I don't want to short daily resistance and hold it into weekly support, right? So I'd rather short the break of weekly support and get a much bigger move from 11.4 into 10.7 rather than hit a intraday or kind of a lower time frame bearish retest, hoping it at least hits a weekly level of support, and then praying / gambling that for reasons unknown, the weekly support is going to break as well and take me to 10.7. Do you see what I mean? I hope you do anyway. Fantasy Cricket Freak says, how much impact nature of candle plays? How much impact nature of candle plays? It depends. I know it's a great answer, but I don't typically follow strict candlestick like, oh, this is like an engulfing, or this is a doji, hammer fly, whatever type of thing. It's really how price is behaving around the levels that I care more about rather than how it looks, so to speak. So that's Bitcoin. That's, I think, fairly straightforward. Okay, and those setups should be clear. ETH. I've had a couple of nice intraday pings on ETH that I, tweeted out those entries. So whatever, go check them out. One was at 417, which took like $2 of heat before we traded through the high at wherever the hell that was. Where was that? Yeah. Where was that? I don't even remember. 417 into, that was pretty scary looking, but we got a bounce, which SFP'd this high, and then we shut down. And then another entry around 397, I think it was. Whatever, I don't remember the exact numbers. And I covered that at intraday FTA, which for me was, I think, this last layer pre-break at 406 or 407. So that, I've played ping pong with ETH a couple times, and, been hitting these these higher time frame levels on an intraday basis, but nothing too crazy at the moment. It's nice to see this sort of thing, because you'll remember, as one of the rules that I talk about, that I follow in my system, is that when price hits a high time frame level for the first time, I will trade that first test as a scalp or an intraday position, and then when price likely retests the high time frame level, that's when I'll look for swing positioning if it's appropriate. Does a single person remember that from any of the other live streams, or is that all completely alien to you? I pray to God someone comes through here. One of our consistent viewers. Okay, Intramoto, very reliable. Yeah, so that's kind of the basic gist of it. All of my trades are premised on high time frame levels. Just to give a quick recap. So all my trades are premised on high time frame levels. Okay, but it's one of two setups that my hybrid system, which sounds cool but means nothing, offers. So it'll either be the high time frame level. I'll play it as a short-term trade into a low time frame level. Okay, this is the kind of short-term positioning. And then the other one is the swing trade type of thing. You get a high time frame level, and this is more kind of long-term or mid-term, whatever, into the next high time frame level. Does that make sense so far? So it's all based on high time frames. Setup 1 is the shorter term trading setup, where I'll play the reaction of the high time frame level, not expecting it to just moon from there. I'll play it from high time frame into low time frame. So that's that's where I get my day trade and scalp, whatever you want to call it, ideas from. And then if the market is nice enough to revisit the same area or set up on a higher time frame after the first test of the level has taken place, that's where I'll go from a high time frame level in a longer term type of position into the next high time frame level. So the main difference is, what am I aiming for? For the first test, I'm aiming for a low time frame test of support or resistance. If it's the second test or price comes back to the level and it's really building something there, that's where the high time frame swing trades come through. So the reason I like this, and trust me, I've experimented a lot with being only swing and only intraday, or having two separate systems completely. I've been there, I've been through all that. This just works really well for me because I still get high time frame grounding and only use levels that are really good, but I use them for both cases. Does that make sense? Was that a helpful reminder? I hope it does. So yeah, it's with that framework in mind, I love seeing stuff like this because we had the first test of the level. Okay, it took me to intraday FTA, and you can see the market kind of just got stuck, and whether you want to say retested these lows or whatever else, we can always come up with narrative and excuse, but the market stalled, this breakout didn't hold, and now we are back retesting the same high time frame level of support. So that's just nice to see that my system isn't totally idiotic, and these things do unfold from time to time and whatever, right? Mansoor says, second test, is it not a sign of weakness? So I'm going to say no, and the reason for that is, this looks like a second, so this is a monthly level, right? A monthly level, okay? And this is the hourly time frame. So while it might look like this level is being tested for the second time on the hourly time frame, if we look on the monthly, or even on like the daily, right? You need to count, you can't transfer time frames like seamlessly from one to the other. So for me, even on the daily time frame, this whole bit of price action here is just one test. And for it to be a second test, it would need to move away significantly, do something, and then come back to the level, and then that would be a separate swing test. If I were to show you this on the daily time frame, right, and I'm going to ask you, you know, if I were to ask you, like, you know, I've got this area of prior highs at 400, how many times has this level been tested? Hopefully, and again, there is scope to disagree and personal preference and all the other bullshit disclaimers in the world, but hopefully you'll agree that when we're dealing with a daily level, this is kind of, this clustered bit of price action is one test. And then if it moves away, it makes a higher high and then comes back, or moves away a little bit, makes a lower high and comes back. That would be the second test, right? But this is like the first strike at the level, and price is just kind of stuck there and really hasn't moved away, or hasn't, you know, shit all has happened. So I think when it's really dangerous to talk about, at least it's worth being careful when you're talking about, oh, this, you know, this level looks really weak, because it's being tested so many times. You always need to consider the time frame in mind, because what might be 2 or 3 tests on the 15-minute time frame could just be within one weekly wick, right? So it's worth being careful, and at the very least, worth giving some breathing room and not being too strict on high time frame levels when it comes to tests. Again, something I used to do all the time, and something I still struggle with from time to time, and see a lot of traders do erroneously, in my opinion, is they'll have like a really high time, again, forgetting the ETH chart for a second, just generally, they'll have like a really high time frame level, like maybe a weekly or like a weekly or a monthly level of support or resistance, right? Weekly, monthly, and then they're watching it on like the M5 or maybe the the 15-minute time frame, and price will come into it and then nuke and then look really scary for a while, maybe make a lower high and it's poking around, and you know what they'll be saying at this stage is, oh, look how weak this market is. We've just hit an amazing high time frame level and it's broken, it's turned to resistance, etc. And then how this eventually resolves is, you know, market does whatever and then does this, and then completely runs away. And then you have to, and then in hindsight you realize that this bit of price action that looked really scary on the lower time frames was actually the formation of the high time frame wick. Okay? Does that make sense? If it doesn't, go watch my video on time frames, but I can't change trading view to dark mode, I'm sorry. But that's just something worth being aware of when you're assessing levels. We all want to just dive into making an assessment on the spot, like, oh, it's great support, great resistance, it's done its job, it's not done its job. But if you're trading high time frame levels, you really just need to let the market kind of settle, and you need to be fair and use a time frame which could accurately reflect whether that level is doing its job or not. Okay, so that's my personal view on it. So yeah, we've done the BTC kind of technicals and plan, etc. Now, interesting thing about the monthly close coming up in whatever 9 days as before. It's going to be quite interesting, because if we close below 400, it would suggest that this is just kind of a monthly retest that closed at resistance. That would, depending on the close, it would put me in a quite tough spot. I think if the monthly closes below 400, I'd certainly be neutral, because it has happened in the past. So you get a monthly close at a level which isn't, you know, bullish. You get a monthly close at resistance. Bitcoin's done it before. And the next month just completely, literally the open of the next month completely smashes the level. So I'm probably going to make most of my assessments on slightly lower time frames, but I'm expecting a close in this area, to be honest. A settlement around 400 for the monthly close seems reasonable. I don't think, I'm not convinced that the market's going to fly away before the monthly close and be really far from this level, okay, which is fine. And then even then, if we do get a bearish close at 400, it's not the end of the world. From a level to level point of view, on the intraday basis, and we'll talk about this, FTA is 360, which is this high time frame swing low. And then if we get a breakdown from this box generally, so this is kind of the bearish case here, and we can talk about how clear that would look on the daily time frame. So monthly, I'm just kind of spitballing with you guys because the close is coming up, but it's really the slightly lower time frames which I think are much clearer, so we'll get there. But basically, if this area acts as resistance, FTA is at 290/300, okay? And then if 290/300 fails, then we basically have to say, lo and behold, what would this look like? Hopefully, I don't need to draw it for you. Pullback, should have been support, failed, bam, something like that. Okay, so just worth bearing in mind. ages away from any of that happening, but context-wise, the last line for bullishness, or maybe I'll rephrase, closing at 360/400, it would be a close at resistance, but it wouldn't be the end of the world as long as 300 isn't lost. If 300 is lost, then, you know, things start getting a bit sweaty. That's some context I think is worth mentioning. Sorry, what's wrong with my voice? His voice is quite young compared to his profile pic on Twitter. Yes, because contrary to popular belief, I am indeed not deceased American economist Hyman Minsky. So I would expect some divergence between my voice and my profile picture because I'm not a dead American economist. I hope that smooths out any discrepancies. I think Don nailed the weekly time frame pretty well with this area. Well, I think he's got a box here or something, right? I don't know how he's done it. Let me just box out this candle and pray it's something like that. Whatever, this area. Okay, which lands around 360. And this is where the other monthly level comes from. It's basically this swing low, which is the swing high here. And it's currently being retested. I think this is pretty good for directional bias generally. If this is a break and retest type of deal, then the lower boundary should certainly hold. For me, that's around the 360 level, with wicks lower being like somewhat permissible. That's fine. Failing that, you know, if we get this sort of thing, then we have to contest with the macro retest level around 300 as mentioned. So to be clear, like, where the fuck is the market? Well, Bitcoin, okay, support is 11.5, and then support is 10 mid, like the mid 10 or whatever, mid 10. So this is weekly, and this is monthly. ETH has very similar technical structure. Maybe the levels are slightly, you know, aren't as clear, but, you know, pretty much still there. Support is, I'm going to say, around 400, and that's going to be monthly. Plus, I'm going to put in brackets 360 weekly. Okay? If this area fails, just like the 11.5k area, we can say, oh, 11.8, 11.4, you know, it's a rough area. But then we get the, whatever, let's just say 300. So they're very structurally analogous, right? Because for Bitcoin, the kind of breakout continuation support is 11.5, and if the breakout fails, it's the bull market do or die type of thing at the macro retest mid 10,000. ETH is the same. Like, the most aggressive continuation, the kind of market's broken out and it's not pulling back to retest level, is this 360 400 area, the one we've got here. But if that fails in a very similar way, we've got a meaningful or sizable correction until we get to the equivalent market structure breaking end of the world scenario test at 300. So this is just the context, which is again why I don't want to be bearish here, because I think there's a better bearish setup if the market shits. I'd rather take it from one level to the next, from the failure of 11.5 into mid 10k, or the failure of the 400 area into 300, rather than sell what could potentially be a higher low in Bitcoin, and also the ETH pullback to the 400 level, which is still currently intact. Do you see what I'm saying so far? Does that structural comparison make sense to you guys? Okay, awesome. Awesome. Leave a like if you haven't already. Subscribe to the channel. Buy my t-shirt, etc. Now, ETH is pretty cool, technically, because, for directional bias, we can simply mark out the pre-breakout range to some extent. You can see the lowest close lands at around, whatever, the 370 area. And then the highest close, top of the range, is our 400 level. This is really good. Why? Because we know for intraday trading, it's really nice, where you've got the range high and the range low, and if price falls back within the range, you've got a high probability target at the bottom of the range, and you can just ping pong intraday stuff here. That's very cool. It's also helpful because for directional bias, it's about as straightforward as it gets. Technically, dips into this area, and again, Not the whole box is support. It's really the top boundary and bottom boundary. Those are the important ones, but just for the sake of structure, dips into the red box are technically bullish retests until proven otherwise. So, you know, even if you don't want to trade the intraday stuff, you kind of have a directional bias into this level, being aware that if one level fails, you try not to do business in the middle and reconsider at the bottom, okay? But the logical consequence of that is if the arse falls out of the bottom of the range, then that will be bearish, and that's when I'd probably look to sell into the 300 area, whatever. Okay, so I think you could quite literally, if you don't want to, you know, you could either draw the levels from the highest close and lowest close, like something like this, pretty much lowest close, highest close. This is the pre-breakout range, and just use that. That's why I bought 397 or whatever it was. It's because, come on, so resistance, market breaks out, market grinds down. I mean, if I were doing shitty technical analysis, textbook, education type of thing, these are sorts of examples you'd use, right? So price pulled back to support, and I bought it for a quick intraday trade. It's really not complicated, okay? So I'm going to go over my bullish plan and my bearish plan, as well as the assuming you kind of understand the intraday side of things. So for the bullish plan, given I've already pinged the 400 level, I'd want something a bit more. So for me, that's where Mr. Grey Box comes in. And you'll remember this was the... I mean, this is a really good level, because after the 400 level was broken, right, by this candle, we had this little consolidation before the final leg up, right? Break, sideways break. These levels are always good, especially when the initial impulse formed at or through a key high time frame level. That's really cool. This was a good technical level in itself. You get a bit of a deviation. I mean, this for me is what a deviation should generally look like, by the way. It's not just chop at the level or just you've drawn the level wrong and somehow the market's back above it. You see, you get a close below the level and then a really impulsive close back above it. So no willingness to trade below the technical structure. You got a nice little retest, okay? And then the support resistance flip on the other side of it as well. So really good structure. So I think the safe bullish plan for Eth USD. Now, mind you, depending on what kind of price action we get at 394, 400, it could still trigger something for me. So, for example, if we were to, again, I can't tell the future. I can't tell you exactly what the candlesticks would need to look like. Such is the life of a discretionary trader. But some sort of real effort to break through the 394 handle, a real overextension through there, which fails on a retest, right? Something risk-defined. This is a very glorified set of lines, and the market almost never looks like that. But you get the idea. A real attempt to break the first swing low. This attempt fails, and then any sort of pullback into pre-breakout structure I think would be reasonable, and I'd take it from A at least to B. So I could still get a bullish trigger at 400. It depends how the market is, what the market does, and what kind of price action we get at the level itself. If I were a gambling man, I'd say it's very likely that we push into these lows and make a real attempt below 390, but only once that level gets reclaimed, something like this, would I be interested on the long side at the level itself. I've already done the trade, the hit and run limit, not limit order, but like the first reaction spike. I've already done that. So for me to get re-involved on that high time frame basis, I need to see something a bit more compelling, okay, or something more risk defined. The easier bullish setup, I think, would be pretty much a reclaim of this level here. Fairly straightforward. Be what may at this high time frame area, the spike, the breakout, etc., all that type of stuff. Where is FTA? And FTA is this structure here. So if we get a break of FTA as a result of coming from a high time frame level, that will be pretty good evidence for me of continuation. I think at that point these highs are toast, and we go from the level probably towards 500. If I'm being honest. I didn't really have technical resistance until some pretty silly prices, like $700 or something. Actually, no, I'm lying. I've got a midpoint. I've got some sort of monthly midpoint here at 532. There we go. Okay, so the bullish setups, something which looks good at 394. I know that doesn't sound terribly helpful, but hopefully you've learned something of price action, and I've got a video on my channel called Clean Double Close Setup, and previous live streams we've talked about how support resistance is kind of on like a spectrum, right? How do we draw that stuff? Something like this, And, as the market closes above or below the level and low time frame patterns and reclaims all of that, the market kind of basically moves in terms of where it is on the scale. Is the level acting as support or resistance? All the price action stuff, all the setups. I'm sure those of you watching, especially from Telegram, by now you know what I mean by bullish price action. Break and reclaim, blah, 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 all of that sort of stuff. So setup number one for bullishness, something good happens at 394, ideally an overextension which fails and then puts pressures on participants trapped at the lows. That would be fantastic, and for that the FTA would be grey box, but I'd likely hold that into higher time frame objectives, into 530, whatever that level we just talked about on the monthly was. But the safer setup, I don't want to use the word adjective safer, it makes me uncomfortable, but perhaps an alternative setup, or a setup for which to pay up for, would basically be this fantastic pivot at the 430 level, support, breakout, resistance, etc. Essentially, reclaim of that, take it into the highs as FTA, but those are probably toast, and a high time frame trending move towards 500, 530. Whatever it may be. Uwa Scott says, what's the meaning of FTA? I've got a video on my channel which covers it. It's one of my best videos. I go watch it. It's something I reference a lot, so it'll be useful. Bearish setups for Eth Usd. Yeah, I'm sort of hard pressed. I don't want to do business around these levels, and I'll explain my logic in a moment. I don't want to resell 424 personally. Now you might think, oh, well, that's outrageous. It looks like such a nice technical structure. Such a nice pivot. It's resistance, and if the market pushes up, it'll be above the swing high. So it's like a liquidity pool and all that type of stuff. But the reason I don't want to sell it is because I do not want to sell a intraday level when the market's bouncing from high time frame support. Because I think if this is a move from high time frame support, there's a really non-trivial chance that intraday resistance just gets blown out completely. So I don't think that's a sell that I want to take. I think the sell at that level has already pretty much played out on this kind of retest that looks much nicer on the 4 hour. Sure, you might get a reaction off of this level if the market rallies back and pulls back a little bit, whatever it may be. But for a position, I don't want to resell this level. I'd much rather play the strength, again, context from the high time frame level above this level and take that, rather than hope it does its job again and I somehow get a third retest of the monthly level. I know which trade I prefer out of those. Bearish setup. I mean, I think you could make an argument for A to B. So from the monthly 390 to the kind of daily 370, 360 area. The only reason I'm not jumping on this idea is because, given we're still in an area of what I presume to be support for now, if I were to take the short from 390s into this, whatever, 360, 370 area, I would manage that tight as a motherfucker. Because the amount of times that I've seen setups, well, it's literally the opposite of the bullish setup, right? I don't want to be on the wrong side of something like this. Attempt, you get the breakdown, oh, let's sell the retest, and then the market just does that, right? I don't want to be on the wrong side of that. So if I am to sell 390s targeting 370s for like an intraday position, any sign of strength, reclaim, close back above, like any type of bullish price action above the lows, I'd almost certainly puke and get out of that position. It's not really my favorite idea for that reason. I think there's a lot of trap potential in the 390 area to get over eager sellers offside at a high time frame area, so I don't want to be on their side. I'd rather play the strength either at the level itself or through FTA. Really, for bearish setups, I'd need to be convinced of a retest of 300, and for me, it's this 360, 370 area that would need to go. So at that point, it would be very clear that the move, or it would be very likely, I think, that the move above 400 was some sort of monthly wick, breakdown, deviation, whatever you want to call it, and then from a macro point of view, something like this towards the 300 handle would be more reasonable. But I just don't like these areas for bearishness. I'd much rather be flat and wait for strength rather than try to catch some scraps when, again, the space is at lower levels. Does that make sense so far? Neil says, so at the moment, Eth Usd on 15-minute has bounced off 394 and is being rejected off 400. I know it's only 15-minute level, but it's an example of bearish retest. It's not an example of a bearish retest that I would personally be a huge fan of, simply because of time frame hierarchy, right? Like, if we're at a monthly level of support, is it reasonable for me to sell a 15-minute level of resistance that is only $6 above the level? Maybe as a scalper or whatever, really short-term tick trader, sure, but from from the framework that I use for trading, do I want to sell a bounce off a monthly level for $6 into an intraday level of resistance? And generally the answer is going to be no, right? Because if time frame hierarchy plays out, you'd expect the move from a higher time frame level to smash lower time frame levels above or below it, depending whether it's support or resistance, right? So yeah, in a very technical way, is it a bearish retest? I mean, sure, anytime support is broken and the market rallies back into it, that is a bearish retest in those purposes. But whether it's actionable or whether it's a good idea to take action in those circumstances, I think it's a slightly different question. Okay, M5 says, do you ever consider daily bearish engulfing candles? If the context is appropriate, yes. If it's not, no. It depends where they form and as a result of what. So that's ETH. That's ETH. Fairly straightforward. Again, my preferred way would just be to deal with the pre-breakout range as a kind of consolidation. Play it from range high to range low on an intraday basis. For bullishness, any sort of strength through the range high or the FTA break around here for me is good to go. Or if you want your closest to invalidation, optimal risk-reward long setup for trend continuation, it would be at the bottom of the range, some sort of either just bounce off the level straight away, or as before, an overextension through the range low that gets reclaimed, and we can hold that to high time frame objectives. Obviously, failure at the range low and, actual follow through, then we have to concede that this ends up being some sort of, this is the range, fall back within the range, find resistance, this ends up being the deviation, and we play it to whatever. I mean, that's a bit extreme, but you know what I mean. But for directional bias, pre-breakout range, upper boundary, lower boundary, pretty straightforward. And hopefully the trading plans as a result, either really good strength from 394 or a reclaim of this 420 level. Those would be my preferred setups. Yeah, I think that's what makes sense. And again, things change, guys. I really wish I had the foresight to sit here and be able to go over every single potential setup and what it would look like exactly and all my FTAs and targets and validations, but it's just not how it works. Sometimes the market just gives you a gift on a plate, or the context really aligns for something fantastic and you just need to trade it. So either way, you'll know it'll be in these areas and at these levels, whatever else, but I can't really, foretell every single instance. Like, for example, what if I get something really positive at the 360 level, right? Something that just looks very fantastic, strong, risk-defined, etc. It could suddenly generate a trade idea where I go like A to B, right? I don't know. I don't want these streams to turn into, well, you could do this, you could do this, you could do this, you could do this, you could do, this. It just ends up being total shit. So I'm gonna tell you guys the stuff that jumps out at me, the levels that I'm using quite strictly. But I'm hoping that through trading education and all this sort of stuff, you can develop your own framework and hopefully even foretell what I'm thinking when the market's doing something, rather. For people asking what FTA means, please just search CryptoCred FTA. Hev Sibber says that Fred has a video on FTA. I haven't seen Fred's video on First Trouble Area, but I don't know if it's as good as mine. I doubt it. So either way, check those videos out. They're very useful. I make them for a reason. ETHBTC hasn't changed much since we did that cringy video on Twitter, the short-term one, right? Where the argument of, go away, we don't want these lines. And leave a like if you haven't already. I hope you're enjoying the live stream, guys. And we will look at Link in a moment. The argument essentially being that we're retesting this kind of old range type of area. We've hit the top of the range. Support is towards the bottom of the range, which is also this level here. So ETH BTC has just been pulling back there. The good thing is, as before, hopefully a lot of the stuff I say will be stuck in your, well, not hopefully, it sounds like a curse, but just so I don't have to repeat myself, I like to trade with a space, and really, you can see that if we get a range reclaim or range high breakout, whatever you want to call it, something like this, I think there's about a 50% move between the breakout of the range and the next kind of area of support and resistance. So I think to be bullish ETH BTC, as before, rather do it something convincing at the bottom of the range or strength through the top of the range. But for now, this is just at resistance, and that seems to be doing its job for now. A lot of these just done really not much. Litecoin, as Donald was spot on here, and I mean, we write the newsletter together, so it makes sense. A lot of Litecoin chilling. I know it's on the USD pair, but generally, you know, worth being aware of where it is in comparison to just holding Bitcoin at resistance for now, and isn't screaming anything else for the time being. You could even just delete all these lines and go for the simplest level in the world, lowest close here. If we get strength above this level, we can have a discussion about trading towards the top of the range. Okay, but for now, you're being shilled a bearish retest, which is whatever, fine. Link is show. Oh, actually, Tezos is hilarious just because it's Tezos. Paul asks a very good question, actually. Does your system suffered many evolutions since you established the main rules? I don't think it's suffered. It's been to the benefit of my systems. But yeah, certainly since I first, sat down and wrote out a framework for how I want to trade and approach the markets, there've certainly been a lot of changes. But they've all been positive, and as a result of, doing stuff which works better. We're going to look at XTZ and Link. Okay, XTZ. This is, so we talked about the trend line, okay, the Chad trend line, but then we also talked about the weekly range high, which is where the market turned. So then, once it pulled back, we ended up getting a slightly cursed range. I think it's the same range that we covered previously, or it's broken low. I don't exactly remember. I know we talked about this range for sure, basically price being trapped between the trend line acting as support and the weekly range high acting as resistance. Since then, it's fallen back below the trend line, and we've kind of got a new cursed range between the weekly pullback level and the top of the trend line acting as resistance again. There's nothing bullish here at the... I mean, yeah, it's at support in a sense, sure, but for me to get... Now that we've had the rejection from weekly resistance, I think that validates it even more as a reasonable entry trigger. So I think a weekly close above 35.40s would be a valid trigger for continuation. But until then, it just seems to have, as soon as it hit that level, you've kind of had bearish price action since then. And if we really look on the intraday timeframes, I think a little bounce from here wouldn't be too unreasonable, depending on the candle closes. We are at weekly. This says resistance, but it's a weekly level, so it doesn't really matter too much. But generally, I mean, looking at this now, I think this stays below 30.30, good chance that we fill to the next weekly level at 27s. So again, very similar thing. If we see a real effort to break this level, which isn't rewarded, and then we can just box out the pre-breakdown consolidation and just do something like that, that'll be fine with your objectives being the trend line and or the weekly range. If this just keeps drifting down, the next real level for bounce is 27.08. But my preferred setup would be either something like this, but I don't know how cleanly that would turn out, or quite simply just a weekly close above resistance would be welcome. And again, for me, this isn't a weekly close above resistance. This is a weekly close at resistance, because look how tall the wick is and where the candle close is relative to the level itself. So you always need to, that's what I mean by considering context. You can't, I probably could automate large swathes of my strategy if it were as simple as candle close above, candle close below, etc. But context always matters. And in this case, you'd agree that this isn't the type of bullish close at a level that you'd want to see for continuation. So still range bound. Nothing else to say. And, people compare it to Link. Oh, hello. people comparing it to Link, I mean, Link just pretty much closed above the same level and mooned. We can actually look at it right now and sort of round off on Link as well. It was a very similar type of thing. Level isn't as clean, but whatever. You can see it got stuck, closed above it, and looked much better. And you can see the lower wick used it as support, whatever. But this is like the first real weekly range breakout. Tezos is slightly messier because it's had more tests of the range high and more ambiguous closes. Link was pretty straightforward, very clear resistance, and I think the daily time frame looked really good around here. And then you got, you know, the legs up. So you could just wait for something similar to happen to XTZ. Everyone's shilling it as the kind of follow Link, etc. I think that's valid, but it just actually needs to line up technically as well in order for that to be actionable. Let's talk about Link. So on the weekly time frame, I've got support lower down, and this is just the theme you'll see in strongly trending markets. You can't always just wait for like a pullback to, you know, either the lows or some amazing level. You'll sometimes just have to deal with post breakout consolidations as your support resistance structures. So in this case, as in the newsletter, you would be around, what is that, 85 to 70s on the weekly time frame. Support here, and just as before, it's the range high that matters, it's the range low that matters. You can play the reclaim with the range high, or you can get something risk defined at the range low, generally. Okay, this is how this modeling, if you will, works. We have a similar fractal to that on the daily time frame, actually, and you can see what I mean. You just have to, with these fast moving markets, you're not always gonna get priced to develop a nice looking base and give you all the luxuries in the world. You have to deal with what you're given. So with that said, this is the consolidate, you know, break, sideways break. That acted as resistance and led to a move down. Talked about it in the newsletter when it was retesting here. The newsletter link is in the description. Please go sign up. It's free. Literally, just read it and get the levels and be a better person, morally. But now we've reached support in the form of the next, or the nearest, I should say, post-breakout consolidation. Again, swing high, breakout, market moves sideways, goes up again, and that's what you have to build your levels in a fast-moving market. Literally, boom, support, etc., etc., and then you can just play it from range to range. Now, this is where a lot of the TA nonsense comes in, like, oh, is this a demand zone? Is it an order block? Is it a cluster? Is it a mini range viewed on a higher time frame? Is this support resistance? My question is, who the fuck cares? It's literally all the same thing. 99% of the rectangles that are posted and that exist it's just rebranding the same technical concepts to sell you a course under a different name. Like, I've traded with, you know, all the ICT guys and supply demand guys, range guys, order block guys, and surprise, surprise, everyone gets the same bloody levels because they're all taught in the same way, just under different names. And the anatomy doesn't really matter too much. Oh, is this like a mitigation block? Is it a breaker? Is it engulfed supply demand? Is it a deviated range high? Oh my god, who cares? Like, you've all got the same level. What really matters is, can you generate trade ideas off of it, and then can you execute when or if the market comes into it? It's a really just kind of pet peeve of mine, but it's really important not to focus on the vernacular, if you will, but rather on building a system which uses whatever these boxes, rectangle structures are in a way that helps you and doesn't just make you seem intelligent on Twitter or wherever else, right? So Link, I'm not going to start screaming doom. I mean, yes, my weekly level is lower, but I do have us at support. I think the reasonable thing to do with Link, and especially because its volumes, which is pretty decent both on the perp USD pair, but also Link BTC, is pretty much short-term trading using these. I mean, this is rough. I haven't drawn this one exactly. There's a nice link chart in the newsletter, okay, which has got all the levels, and Duck put a lot of effort into that one. But basically, like for example, this price action here was a really good instance of where one of the consolidations was broken, and it looked like the end of the world because, you know, oh my god, it's made a lower low close for the first time in forever, it's all over, and then all it did was literally engulf, retest, and trade higher, which is why I don't think for Link generally, until proven otherwise, until we get some weekly weakness and, you know, the higher time frames start to look more convincing, I don't think chasing breakdowns on Link makes a lot of sense. Strategy-wise, I think trading these clusters or consolidations on an intraday level-to-level type of basis is pretty sensible. Even if it is kind of just from A to B, something like that. Nothing wrong with any of that. Or if you're in a position to new highs, just wait for the breakdown cluster to be reclaimed, just like it was in this instance, and then you can shoot higher. That's pretty reasonable to me. For kind of macro pullback, big scary stuff, if this keeps going, the first port of call for me, as I mentioned, would be the top of the weekly breakout level, wherever this lands, wherever this close lands. 88s. Okay. The only instance in which I'd start kind of be worrying for Link is if we get the first real kind of weekly break or failure of support, which for me would have to be price falling out below the range at 75s, and then we have to play into the old range. Okay. Something like this. So, big support. If this fails, we're down. I have to play it to the next range. So I guess my time frame views aren't too dissimilar. This thing has been trending up since inception. That's really important and worth being aware of. It behaves really well technically with regard to how it trades around pre-breakout consolidations. So instead of trying to be the legend that catches the bottom, the top, whatever else, use the technicals to your advantage and basically play the range. And if you want a position for continuation and the whole kind of bullish comeback new high scenario, there's a nice, the final, or I suppose the most recent range, pre-breakout range before the highest high made. If we get back above that and kind of erase most of this breakdown, something like that would be good enough to send price higher. If you want to be more price agnostic, just play the consolidations. Fairly straightforward for Link. I don't really see the need to panic at the moment. Why panic when you can trade? How's that for a motto? Why panic when you can trade? There we go. And yeah, it's about just having, as mentioned in the other video, it's about tailoring your expectations to some extent. If the high time frame trend is positive, is it a good use of your time to chase the breakdowns into other high time frame levels of support, or would you rather chill and wait for either high time frame levels of support to be hit or levels that were broken that are now above market to be reclaimed? I know which one I want to do. Perhaps your strategy is different. Perhaps it isn't. Does that make sense? I mean, it does to me. I suppose that's all that matters at the end of the day. Right, I think that's all I've got, gents, for a casual Friday. As always, I think I'm the worst casual Friday host on earth. It just turns into a very serious analysis, plan, pseudo-educational, whatever type of bullshitty live stream every single time. Someone needs to put a stop to this. But I did say we'll get a guest for next casual Friday, so that'd be great. Yeah, let's round up. Thank you to Bybit for sponsoring Technical Roundup. They're great. Even just clicking the links in the description helps us a lot. Go ahead and do that and show them some love if you come across them on the interwebs. Hit the like button. We're almost at 200 likes. Come on, I know you can do it. We are better than this. United, we are stronger. Soyuz, Niroshima, all of that type of stuff is great. The newsletter comes out on, well, every single Tuesday, and that's where all the non-messy charts with the nice levels are. It's free also. It's also sponsored by Bybit, but if you literally just want the levels and the analysis and none of this squiggly line crap, go sign up to the newsletter. It's a nice leisurely read on a Tuesday evening. And I believe that's all from me. Thank you for your support. As always, I hope you have fantastic weekends. Safe, masks, wash your hands, etc., etc. I'm not going to start turning this into a public health stream. Trade safe, and I will see you for Monday's session, same time, same place. I'm going to go watch Lucifer on Netflix and then cancel my subscription because of that weird underage dancing girl thing after I'm done with the series. Alright guys, take care. I'll see you on the flip side. And girls. Bye-bye.